We're live! Woo! Living and thriving. Alright, let's start the podcast. This is Talmor Talks, episode 2.
Perfect.
With Harrison Goldblatt.
Happy to be here.
And I'm excited to have the second episode with one of my good friends who I've known for over 10 years.
Over 10 years. Must be since 10th grade.
Yeah, exactly, 10th grade. And we've lived together, we've went to camp together, we've done a bunch of things together.
I actually, I knew of you before I met you because we had another mutual friend that we met at Jewish camp, and he said, when we get back to high school together, there's this really cool guy, Talmor, that I got to introduce you to.
Right, so we were amongst each other, and then realized that we were going to the same school, and boom, click, like it's like a rocket ship.
Yes.
You know what I mean?
We clicked.
I just remember meeting you and being like, there's
potential.
Potential is important in our relationship. You know, we're just like always like looking to set the bar high.
I think it was the connection on growth mindset that actually brought us together, because a lot of our peers were arguing about whose car was better, and we just wanted to figure out what our next steps were in life.
Yeah, like what? Yeah, my interests were things that were more internal and more like personal growth, and
yeah.
I think that's
personal and physical growth
and physical. Yeah. They come together, right?
They do, absolutely.
So that's why we're staying juiced. All right. So thanks for agreeing to do my shenanigans. You know.
Absolutely. Should I give a little intro about where I'm at in life?
Yeah. So. Yeah. Go introduce yourself.
Excellent. Well, for a brief time period, I went by Harry Gold on the internet, but I decided, in the interest of transparency, it made the most sense just to go by my full name, Harrison Goldblatt. And I would always have the awkward conversation of, "Oh, are you Harrison or Harry?" And it'd be like, well, it was just a rabbit hole that I found myself going down all the time, so I'm just Harrison Goldblatt.
Yeah, full name is the way to go. It's searchable too.
However, Harry Gold sounds very similar to Ari Gold, who's the agent in Entourage, who I find is a very, very dramatic and passionate and inspiring character. So I felt like there was some overlap between Harry Gold and Ari Gold. But now I'm Harrison Goldblatt. That's my name. Now that we got my name across,
right.
I've been trading stocks and options for the past year and a half full time, and of course I've been trading since I was 18. And just going into the workforce, my whole mission and belief was that I just want to work so that I can manage my investments full time as soon as I could, because I realized the longer scope of that was, well, you ultimately work to save to invest, so why not just head straight towards the investing part? So that's where I am today.
There it is. And you used to live in California.
Absolutely.
Right? And there was plenty to do in Los Angeles.
There was.
Plenty of opportunities there, but you decided to switch directions and jump over to Vegas, which is in Nevada.
That's correct.
Can you tell us about that and like what brought you to that? And yeah, it's a big move. You just pick up your bags and leave.
Okay, so the move from California to Las Vegas. So let me talk about California for a little bit. I grew up in the San Fernando Valley. I was born in Van Nuys. A few years after being alive, and when I was about 5 years old, they sectioned it off and called my section that I lived in Valley Glen.
Oh, wow.
So I remember one of my first memories was going to the party in the neighborhood park. We renamed our section of the neighborhood. People were very happy about that. I have no further comment on that. I think, obviously, we went to high school together on the west side of the valley.
Right, and the valley is this place that doesn't get the traffic that LA does, and in like the center of LA. So it's kind of like the suburbs, a calmer area where you have to like go to the city if you want to be in the thick of things.
I also think growing up in the valley, I didn't realize how close I was to all the action, because the culture is different. you meet different types of people, whereas in the city, you know, it's not unlikely that you just run into a celebrity shopping for shoes or some random stuff. But the Valley feels very suburban. It's a little bit more removed from the entertainment industry, but I remember just as a teenager hopping on a canyon and like accidentally ending up in the middle of Hollywood Boulevard. Like, oh, I didn't realize we were so close.
Well, boom, Hollywood.
Yeah.
And you just see like a ton of tourists and a ton of people and stores, and then you realize that Elvis Presley came and did movies here or whatever. All these people have been here.
Mm-hmm. I would say, so I grew up in the Valley, then I spent 4 years in Santa Barbara for college, which also felt like it was much further away than it was, but it was still in Southern California. It very much felt like I was living in a bubble. But that was a beach town with a very laid-back vibe. People that come out of that school end up being both very intelligent, but also very social. So it's a great mix for doing what I did next, which was sales. And I spent a couple years living in West LA, which was awesome. The nightlife is very difficult to beat. You get people from far and wide and close, and just all kinds of people traveling to just drink and be social.
And in college, there was a business that you were jumped in on, or you were always like putting your time in towards things that grow, like anything that you want to bring up.
Yeah, absolutely. But I wanted to come to how I wound up in Vegas. So I'm giving like an overview of California, and basically I understood that it was just difficult to get ahead living in Southern California with high taxes, high living expenses, and if I ever wanted to speed up the process of working for myself, I would need to live in a city that's both more affordable but also with a lot of opportunity. And Las Vegas, I just had so many reasons to move here, including one of my best friends, Aaron Novick, who I do business with. He is in our live studio audience actually at the moment.
Yeah, he's right over there.
And
ready, cheering us on.
Yeah, so he and I had a lot in common. Las Vegas was a city that was growing, but still just an afternoon's drive away from my family in Southern California. And here I am. My favorite thing about Las Vegas is the fact that it's the center of the world when it comes to conventions and getting people together. So if I want to meet people from anywhere in the world, rather than traveling to everywhere, I could just be here and they travel to me.
So there's the reason for a lot of people to come here on vacation or for events. But it's still like the population is still kind of small, right? It doesn't feel at all like how LA feels.
So the population is in the millions. So I think it's about 2 million people live in Clark County. But the way that it's spread out, it's very suburban. So you don't have people like climbing on top of each other, waiting in lines everywhere. It's like it's probably
you get the peace.
The amount of people
having less people.
It's probably the amount of people per mile is probably way less than Los Angeles. Per mile.
Yeah, so that brings down the cost of living, brings down the that's essentially that, which is important, right?
Cost of living, traffic, parking's huge.
Things that we long for in LA. And LA's, it's a great place for doing showbiz.
Absolutely.
But it's really just like a big potluck of people, big salad, and it doesn't have much history.
What's a melting pot? I think
it's a melting. Yeah, that's
melting.
right.
It's a big salad. You know what? I think I'm sure LA invents a lot of different types of salad, so it's just a big salad.
True. I was in LA and I went to an Italian restaurant and it happened to be vegan. I was like, okay, I don't want any dairy in my pasta, and they're like, this is a vegan restaurant.
So yeah, perfect. You came to the right place. I'm pretty sure West LA is kind of known for how far they push the dieting and the eating clean.
Oh, yeah.
So, makes sense. It adds up. Now, your experience, you lived in Los Angeles as well, so you had some time living in Burbank and also, so I feel like you've spent most of your LA time in different parts of the valley, right?
Yeah, I lived a little bit in Glendale or Burbank, and then I lived in. Well, high school was like in a different part of.
We basically lived there. Yeah.
The valley, in my conclusion, is a very calm place that experiences the traffic of LA.
Yeah, so road rage if you're driving, but if you're not driving, it's calm.
You just have to be calm in every situation.
But no, I don't think I really experienced too much road rage either. Just
I remember getting my license and having to choose a path, which was either road rage or allowing people to move ahead of you and driving slower so that nobody is cutting you off because you're not driving fast. You're going from gas to brake. It doesn't really change your speed.
I think I have some commentary on driving, LA driving, Las Vegas driving.
All right, go for it. Yeah, inform them about the differences.
So LA driving, first of all, if someone cuts you off in LA, it's almost like a cooperative effort. Like we're all just trying to get home.
Right.
And if someone cuts you off and you don't have to slow down, it's like good job. Like whatever you did, good move. If you go down the side lane and you gas
you're
it,
applauded. Yeah.
Yeah.
You're like wow, you filled in that empty space.
Good. Yeah. Thank you so much. You made the roads more efficient, and it didn't affect my day. Or if it did affect my day, it was so smooth and graceful that like I appreciated the being able to watch that. Whereas in Las Vegas, if you go to one of the outside lanes, which is usually a bus lane, which is kind of cool, and if you try to get ahead of the people in the other lane, they're like, no, that's my spot. They will actually race you to make sure that you don't get into that spot. And I've seen it.
That sums up the difference between LA drivers.
So it's aggressive, but in kind of a self-righteous sort of way, whereas LA is aggressive in like a cooperative way, which is kind of neat.
Yeah, they're just not. I would say it's exposure, right? Over here, it's not typical to. There's plenty of space. There's not as much traffic. People aren't ready for you to pass them, and that probably hits their ego, and they just want to. No, I gotta. I'm being tempted, and yes, my car is fast. We can just press a little further.
Well, see, so growing up, when I would see someone do that, I would think, oh, that person's obviously a jerk. Like they went through the effort to show me how fast their car is and make sure that they were ahead of me, right? But once I actually experienced sitting in traffic every day, my first few years working, I'm like, you know what? That's cool. Like, I'm happy for them. I want to be them. And in many cases, I was, and it was great.
Right, yeah. You cut someone off, he cuts you off. It's one big, free for all on the freeway.
It's a community struggle.
Right, it's a community struggle to get home. Some people need those extra 2 minutes to at home, and it's like we respect that. And their commute is the average commute in LA is 2 hours or 1 hour.
Yeah, it's
a day.
Somewhere between
I think it's 2 hours a day.
Yeah, like an hour each way, probably.
And that's average. Imagine there's people who are doing 4 hours because it's worth it for them to drive to the city and make a lot of money and then drive away from the city.
For someone that's watching this that's not from LA, you hear the stereotype LA people always talking about traffic, like why do they always talk about it? And the answer is it's actually that bad. I mean, it's really terrible. You gotta plan your whole life around if you're gonna be stuck in traffic. I mean, if you're in West LA and you're trying to get to a Dodger game, you gotta leave 3 hours before the game starts. And it's 10 miles. That's the crazy thing. It's not even like a...
Is this the truth?
It's the truth.
Oh my God. Okay, well, so the commute is not only to work, but it's to events or to go to the restaurant or whatever, to go get across it. Across the sea of humans.
It's a sea. It's a sea.
Wow.
Or the sea. You could,
Right. People going from Malibu to Long Beach they have a great time.
Yeah.
They're having a great time.
Cool.
All right, well, Nevada. want to get into the mindset that you have behind leaving everything behind and starting something on your own. It's like it's a period in your life where you might not have this type of binary transition from like the hands of society to I'm gonna do whatever I want, and it's just like, what brought you to there, and was it opportunity? Was it a mentality?
So I think for the viewer, I did leave a well-paying job to pursue stock trading full-time. So I left what is traditionally seen as the safe, sure way to financial success to something that is otherwise often seen as gambling. And I did it literally in a very competitive city to a city that's known for its gambling. So both in the career move and the geographic
it's a coincidence.
Location. I think it's
I don't think, I mean, some people, everyone knows that the stock market is some sort of like heart that is pumping in America. So it's not entire. Right. I think that's just one extreme of viewing a stock trader as a lottery player. Mm-hmm. But on the other side, it's like, wow, you're like contributing to the machine that is America.
Mm-hmm. Yeah, right. It's so the thing about the stock market is the barrier to entry to participate is very low, but the barrier to entry to succeed is incredibly high. It's very tough. So,
yeah, and you're saying that there's the statistic, right, on stock trading that puts everything to perspective.
Right. Most traders fail. So,
which is ironic because it's like, like everyone's supposed to like contribute a little bit to the stocks where our IRA is based on stocks, right? So it's like, how is it? But the IRA, you're using a third party to invest. You're not doing it yourself, and that's supposed to succeed in the long run.
So a lot of people will say, instead of worrying about your money day in and day out, why don't you just hand your money off to professionals where it's their full-time job to manage your money, and they have all the training and all the resources available to beat the market, or at least compete with the market. And my question is, why don't you just become the professional, become the well-educated person that knows how to handle and beat and compete in the market?
Right, especially on free time, just add that knowledge, and eventually you'll be able to run it yourself. Do DIY.
Now, obviously, banks, the big banks and the big hedge funds have unlimited resources when it comes to data and research. So,
they have the upper hand on that.
Right. I as an individual, I do not have unlimited resources, but there's opportunities in the market that exist. I mean, not everything in the world is 100% efficient all the time, and if it were, capitalism would collapse. And I think that's a pretty clear concept if you dig into it. Because if everything was 100% efficient, no one would ever make a profit, and no one would ever be in business. So the stock market similarly has opportunities that are not apparent to everyone that participates. Right? Or else, if markets were not 100% efficient, then there would only be one hedge fund that exists, and it would not make any profits. Right? There's thousands of hedge funds, and they each exist because they either believe or achieve a specific niche where they can make money.
And how often do these hedge funds need to change their approach? Because everything's changing constantly. So I wonder, are they always on the fly changing things, making slight adjustments up and down and left and right? Is it like a controller, or is it like we do this until further notice, until something happens?
I think it's. I want to talk about the concept of talking about hedge funds.
Okay.
Because hedge funds are as diverse as they come. A lot of people think of Warren Buffett as one of the biggest money managers of all time. But if you really look at how Warren Buffett is the major shareholder of Berkshire Hathaway, which is a publicly traded company. Their stock is in the hundreds of thousands of dollars, and it's very unique.
One stock?
One share of the stock costs hundreds of thousands of dollars. It's probably...
Is there such thing?
Yeah, it's the only one that's that expensive.
Oh, I see.
And so I don't think he's really considered a hedge fund, although he is a conglomerate of companies. He owns, I don't know, so the stock price is $472,000. But if you really look at the core base of his revenues, it comes from multiple insurance companies. Now, on top of that, he's an excellent stock picker, and he puts billions of dollars into major companies like Coca-Cola and McDonald's and Apple. And I don't think he's considered a hedge fund manager. However, he is one of the most notable people that come to mind when you look at investors. So I want to make that distinction. And just the fact that hedge funds come in extreme diversity. So I kind of want to go down that rabbit hole of diversity. I have a friend, he's about my age. He runs a hedge fund.
Mm-hmm.
He buys about 5 stocks at a time that he buys and holds for the long term. And basically he spends all day researching the 5 companies that he's in. And he decides, okay, every 6 months or so, he says, or maybe longer, he says, okay, one of these 5 companies, I feel like I could replace with another company. And that's how he runs it. Now, there's other hedge funds that literally specialize in high frequency trading, where they're just in and out and grabbing a few cents on each trade. That's a hedge fund. Now,
so essentially, it's I like to make analogies and help me understand if this is a good metaphor for it. But it's a gym, and there's powerlifting gyms, and there's CrossFit gyms. But the goal is to burn calories and to operate your muscles and to.
The goal is exercise.
Performance, or which is profit, performance, or just creating, revenue, traffic of cash flow.
So in the gym analogy, there's a million different exercises. There's a million different ways to train. The goal is exercise, whereas in a hedge fund, the goal is to just make money.
But but you're saying frequency. Are there hedge funds that they only power lift, or there's hedge funds that only do cardio?
Absolutely. So we also know a hedge fund that he does one specific option strategy, and he has money and his friends have money, and they pool it together, and he does a specific trade, and it's just one trade, and that's a hedge fund.
Wow. So yeah, essentially they're checking off their exercise with one exercise. Well, they're checking off their workout with one exercise.
Yes. So basically, to compare what we do with hedge funds is basically, comparing one bicep curl to what everyone else does in the gym. It's I don't know. I mean, it's easy for marketing to say, oh, here's what the hedge funds are doing, but I don't know. I
see, yeah. They're more complex than headlines give.
Yeah, they're extremely diverse.
And you wanted to talk about how the perspective of a hedge fund is similar to a perspective of like an entrepreneur, or perspective of an investor who is an expert, or like who thinks of things in a passionate and complex manner, so that it's like efficient, and so that it's a way that he can create a living from it, right? Like for.
So I think what you're saying is, what's the overlap between running a hedge fund and being an entrepreneur? Is that?
Yeah, because I think that's a bit where we're going, right? It's like that's the perspective you have, but you're not going into hedge fund lifestyle,
right? So
you want to extract those strong characteristics and put them into your life. So you have a lot of inspiration from them. Or
so to be clear, at this point, I only manage my own funds. Obviously, a hedge fund manager seeks new ways to beat the market. I seek new ways to beat the market. The difference is hedge funds usually gather money from multiple investors, whereas I personally just trade my own money. However, look, I mean, my track record goes back 1.5 years of being a full-time trader. So I don't necessarily want to take other people's money until I have years and years of having a positive track record. So
right, you don't want to be in the business of handling people's money, which is a different job. Mm-hmm. You want to be in the business of studying the market and putting, as you call it, what is it? Backtesting.
Yes, backtesting.
Which is like experience, right? Which is essentially studying, mm-hmm. right? Backtesting is studying in a way.
So backtesting is specifically, I think we're on a good topic, by the way. So okay. I want to go back to backtesting. Yeah. But basically, if you're managing a hedge fund, mm-hmm. the overlap with an entrepreneur is the fact that you need to think for yourself and you need to do something that hasn't been done before. So if you're managing a hedge fund, you need to find a new way to beat the market. Mm-hmm. So you can't just copy what someone else is doing, because the idea is that if someone has this revolutionary idea that generates nice returns, before long they're going to accumulate a bunch of capital and they're going to own that market, and they're going to really just suck as many profits out of that concept as possible. Now, there's, in my opinion,
finding a new well. Everyone's finding a different well,
right,
of water.
Right. So if you start a hedge fund that 100% mimics someone else's way of making money, you first of all, you're not going to beat the original, and secondly, you're not going to have an advantage.
So there's creativity in there, and there has to be uniqueness.
There has to be uniqueness. You have to have your own unique way of seeing things.
Mm.
But it also has to be profitable, right? So you kind of have to.
Right. There's that.
Mm-hmm.
It has to be the money flow.
There's also the statistic that most hedge funds don't beat the market. So you got to say, well,
even most hedge funds.
Even most hedge funds don't beat the market.
Does that entertain the idea that hedge funds are just people who are still learning and they're just funneling money to them and out? It's like it's equally zero, right?
Well, if you just look at the definition of a hedge fund, it's even in the name. Hedge, by definition, means basically insuring your investments, keeping things safe. So a hedge is something that prevents you from losing more money. It mitigates losses. So a hedge fund's entire purpose might just be to make a consistent 2% a year, no matter what else happens in the world.
To beat inflation.
Right, or to beat inflation. So there's varying levels of what their goals are. So
you're saying, like, if some random guy just decides to be a hedge fund guy, he can beat inflation with that 2%, which isn't going to make you an income, but it's mm-hmm. going to prevent you from your money from deteriorating.
Right.
And still call himself a hedge fund.
For sure. Absolutely. Yeah, absolutely.
I see. So essentially, like, the creative mind and the experiential mind, mm-hmm. putting those together in terms of the stock market will eventually bring something, mm-hmm. will create something. But if you're saying if you're missing a piece, like, you're a business.
I would say the biggest overlap, to kind of sum up the answer to the question, between a hedge fund manager and just an entrepreneur in general is the kind of the uniqueness factor, but also needing to embrace the unknowns.
Right. Which is the scary part.
Right. So you're not going after the steady paycheck, you're going after what can I learn today that I didn't know yesterday that will help me make more money with less risk. And similarly, an entrepreneur, like, let's say you own a shoe business and you sell shoes, you've got to figure out what style of shoe do I need to bring into my store, what employee do I need to hire, what kind of marketing do I need to do in order to increase my business more than my cost, increase my sales more than my cost. So it's
yeah, I see the overlap there, and I like the comparison to just an artist. I think that's just like a creative. It's an interesting way to look at things. It's where like you're an inventor, right? Mm-hmm. Entrepreneurs are creating things that don't exist. Mm-hmm. And taking that path is kind of scary, but I think my motto for this podcast is that anything is possible, and do it yourself.
Nice. Anything is possible, and do it yourself. You heard it here.
Because it's crazy. I'm picking up the idea of making a podcast, and I'm doing it, whether it's 1 million views or whether it's 2 views. I'm here and doing it. And that's what I want to represent, mm-hmm. is that do the things that you're passionate about, that you want to envision, you see through, right?
Mm-hmm. Hey, by the way, this is recent news. Spotify paid Joe Rogan $200 million for...
100.
Oh, 100?
Can we double check that?
I think it was 200.
Aaron?
We got our live studio audience researching some statistics for us.
I think it's 100 million, and so podcasts have a potential of
extreme
infinite
potential. That's
infinite potential,
and we've seen proof.
And
200 million. Yep, I was trending on LinkedIn today.
It was
trending on LinkedIn today.
I was missing by only 100 million. I was only off by 100.
Only by the entire deal size. It was still 9-figure number
to be exclusively on Spotify. And I used to go on YouTube and watch, or put in the background, but now I have to go to Spotify. He doesn't have any little snippets.
Do you have a Spotify subscription?
No, I don't. It's run out. I've been sharing with someone who stopped sharing with me. And I can't justify the $15 a month at this moment. But
I do have a Spotify subscription, by the way. I've had it for about 5 years.
Oh, maybe I can get on that one then.
Yeah, for sure.
But actually, for the podcast section, you don't need a subscription. They don't give you. They don't give you the crazy advertisements or anything.
Gotcha.
The music side of Spotify, which is what the industry they're in, mm-hmm. is what you have to pay for.
Excellent.
So things that podcasting was a big interest for me. Why? It puts you on the spot. Let's do something. Let's talk. Let's meet new people. Bring light to subjects that have never been talked about in long form.
Yeah, and I think it's interesting for the listener to hear content that doesn't necessarily have to fit in a bite-sized nutshell. Like, I never would have gone down the rabbit hole of hedge funds. I never would have gone down the rabbit hole of driving habits between residents of different cities.
Right.
In like a Tik Tok video or a tweet,
right.
or even a 10-minute YouTube video.
True. So it has an element that isn't seen elsewhere.
Absolutely.
And I think if we want to get into the details of things, mm-hmm. common television gives you snippets, and just it causes your brain to jump subjects and pictures and everything. It essentially causes your brain to be on hyperspeed because of the way it's edited. Mm-hmm. And I think it's nice to have a different different content style that's more natural to how the brain works.
I agree. Yeah, so much of the content we consume is all about maximize, whereas in this setting, someone can learn the details between the highlights almost as if reading a book, but...
Right, yeah, you can take a pause, like a natural pause in the conversation, mm-hmm. allows the mind to wander or to reflect.
Absolutely.
As it naturally would mm-hmm. in nature. And I'm bringing that back. Like, hey, like we don't have to just jump on the train of snippet. And if you're under 5, they don't recommend. Under 10 years old, they don't recommend any television because it causes. I don't know if that research.
Poor attention spans.
Maybe, yeah, it causes a poor attention mm-hmm. span.
Yeah, if you're 100% always focused on, like even a TV show, even a sitcom,
jump.
They're always pushing a joke.
Well, it's always a new cut.
Yeah.
cut.
Every single scene, they're either building to a new joke, or they're landing a joke, or they're giving some background detail that will apply to a later joke. And it's like, it's all, I imagine it's all so planned and structured that there's just a lot of natural details that happen in life that
that you don't see.
They don't happen in most content that you would consume.
Oh yeah. Yeah, they cut out the quiet parts. There's no
Quiet
such thing
parts.
as quiet in
Yeah.
in curated content, which is everywhere. Everything's curated.
Absolutely.
So yeah, podcasts are dope. I think that they're gonna be. I think people are gonna use their ears to listen to things. When people are on the go, stick it in your ears and multitask while you're doing the dishes.
I also think content is changing across the board because especially during the pandemic, there was such a need for the individual to actually be social on social media, but people were not willing to, do the whole light setup and the camera setup and the microphones and the editing, and I think that's why TikTok really blew up because
It's an all-in-one app.
it was giving people the possibility of getting a lot of attention and a lot of views just for being something that random viewers liked and appreciated, rather than being
like a quick way into getting attention for a 10-second video.
I think quality is being redefined. It used to be high production, to now it's more about authenticity and realness.
There is that aspect of things, and that's the area that I'm bringing to life in my mind, because I don't want to watch something that's jumping all the time. It's
exhausting.
I think it's exhausting. So it's also like, hey, like if I have the time and effort and the team to create quick content, then I would do it. This is just way more natural to my life.
Absolutely.
You know what I mean?
Yeah.
And scalability, right? This is for the long run.
Yeah, we could record this. We could push it on YouTube, Twitter, Facebook, Facebook owns Instagram now. Meta, excuse me. LinkedIn. This could go everywhere. This could go on podcast. It could go everywhere.
It could go anywhere.
It could also be seen years from now, and you could do it relatively cheaply. In fact, probably for free.
Yeah, barrier to entry's almost none. So the journey to some sort of utopia of life, which is the $200 million.
Yeah, the journey
Spotify
to a
deal.
$200 million
I'm looking
Spotify
at
deal
you guys.
starts here.
Spotify send an offer.
Spotify, if you are listening to this, please feel free to send us $200 million. I will happily accept.
Send the offer. I'll probably accept. I'll have to discuss it with my financial.
I'll even accept $1 million. I'll give you a 99.5% discount.
To be exclusive to Spotify. Well, that's the idea here in moving forward and meeting up with you, which I appreciate a lot. Thanks for being on my show.
Yeah. By the way, Talmor drove from Los Angeles to Las Vegas to spend time with me this weekend.
This is the weekend I came to visit, and while we're here, might as well set up some lights, camera, and action, and really feed into that the real stuff. Feed into that growth that we really.
So
believe
I personally have a content strategy. Would you like to? Should I discuss?
Yeah, tell me.
Okay, excellent. So where I'm at right now in February 2022 is I understand. Well, first, before I get into that, I want to say I believe the people that are the most impactful in my life, outside of the ones I know personally, are people that have a very strong online presence. I think one of my very first figures that I felt was very impactful in the way I see the world was Robert Kiyosaki and his Rich Dad Poor Dad book. But it didn't stop at his book. You know, he has an online presence. He has a board game. He has a podcast. He has a show. He does speaking events all over the place, and he's
multidimensional.
Yeah, his content is everywhere. And I basically realized that a lot of the other people that I'm learning from, even if it's just a strategy on YouTube, you know, they have a following, and there's a potential for me to buy something from them to learn more.
So do as they do, which is
exactly,
and not what they say.
Exactly. So if I want to be a high impact person, bringing positivity and growth to not just people in my life, but people far and wide, then I need to make content.
And you deliver it the way that they want.
Right. And not only do I need to make content, I can't just make one video once. I need to make recurring videos that are new and fresh and engaging and interesting and educational. And so what I'm doing right now, so that's the build up to what I'm actually doing. So right now, everything I do feeds into a community that I'm building. So anyone that absorbs any piece of my content, I want them to either be a free member of my community or a paid member of my community, where I will collaborate with you one-on-one if you are a paid member. But that's the end goal.
And they're essentially connecting with you in a way, and connecting to this mentality and this world that of your life.
Mm-hmm. Well, more specifically, trading stocks and options. I mean, personally, I don't know.
Yeah, not specific. They're not helping choose what you're eating for breakfast.
Yes. Hopefully not. I mean, I don't think.
But essentially, you're offering them access to your world, and that's what we're doing, right? To connect with you, to connect with other people who are through you. It's a one big brain. So there's a connection I want to make for someone that's interesting, that's heard of the community. Okay. And I still want to get to what I'm actually doing about content these days. Right. But I might have a video on TikTok, for example, that gets 1,000 views. And someone that sees that video might say, hey, the person kind of knows what they're talking about, and I have a video that I want to run by them, or I have a trading strategy that I want to run by them. Now, okay, they can do that, right? And I might talk to them and figure out if it's profitable and if it's sustainable, right? But then there's another person that might do the same thing, where they might want to reach out to me. Maybe they have a strategy and a unique way of looking at things, and they want me to look at their idea. What I want is those two people to meet each other, and I want them to collaborate with each other, but I don't want it to be two people. I want it to be a third, fourth, fifth, 100th, a 200th. I want like all of these people. Like, just because I'm bringing the people together doesn't mean I should be the only person that people collaborate with. I want the community of collaborators to be together, right? So that's my goal. That's my goal of the content. That's my goal. Now, the content that I'm actually making is every time I make a trade, I post a TikTok video of my entry and exit, and I tie them together into my track record so you can see if I'm actually making money or not. Here's a little spoiler alert. I did not make money in January. It was a terrible month. But the actual content I'm creating is those TikTok videos and then daily educational YouTube videos. And in one regard, you're documenting history, which is part of the cool thing about filming things. Yes. And then second thing is you're teaching. And then third is you're bringing like-minded people together. These are like top three positives of creating content and being online. And what about Facebook group? Would you say that there's
we have a Facebook group.
Oh, okay.
So it's just one channel that we have, but I would say our Discord for sure is the most active. I mean, we tried to start a Facebook group long before we started a Discord
Also,
community.
I think Facebook's getting kind of like 50-50 with people. So everyone's starting to spread their attention onto multiple platforms, and it's really, it's like if you're creating a home on Discord right now, right? And that perspective is like for people who actually want to engage, right? It's like it's more of a I don't know. It's more of a friendly, like not a like button type style platform, right? So it gives you more inviting feel, right? Because ideally, like you don't have to broadcast to the whole group, right? You can just like do sub. So
someone could send me a direct message on Discord, or they could send a message through the chat room, or they could send a message through a specific channel in the chat room, so that it's, within a specific category.
Yeah.
So
and what are those categories? Are they just general, or like, because like is it for the beginner? Is it for the intermediate trader? What is
so? For the beginner trader, we definitely have advanced option strategies that we do, and at the end of the day, they pay more money and they win more consistently, which is why we do them. You know,
right.
if the simple buy Tesla every time it hits support worked super well, then that's okay. Then we'll just So if the simple buy Tesla every time it hits support worked super well, or buy Apple every time it hits support, then we would just do that. But in order to have a high win rate and consistent returns, we actually have to end up doing something more complicated.
Okay.
Now, I like to say, if someone can learn how to play chess, then they have the capacity to trade our strategies. Of course, there's still a learning curve, just like there is with chess, but it's by definition not beginner strategies. However, we do have the free educational content for people that literally just want to know what a stock is. Yeah, so if you're a beginner, we have educational content going through each, how to buy and sell a stock, what is a stock, what are financial statements. Then we go into the basics of options, we go into the basics of credit spreads, and we go wide and deep. And the cool thing is we're making a new educational video every single day. So nice. You could imagine, by the end of the year, we're going to cover practically every topic you can imagine, and then some. So we ultimately do want to be a one-stop shop for traders at all levels of experience.
That's a rad goal. I'd love to support in any way.
Excellent. Now, I will say the one thing that sets us apart from other trading groups is our reliance on backtesting. Now, we are the-backtesters.com. The name of our Discord is called The Backtesters, and it's because of this concept that, look, you can have this indicator, you could have this idea, and you can trade it with real money, but why not test and prove whether or not that idea has historically worked? It's just, in our opinion, the smart thing to do, but I will admit it's not the obvious thing to do, because it took us a year of full-time trading to realize, hey, we should actually put these trades to the test to see if they actually work before putting real money on the line. So it's the smart thing to do, but it's clearly not the obvious thing to do.
Yeah, now there's a weird physics in the stock life, and it's kind of past my level of understanding. I would say I'm a beginner, and that's why I'm stoked that you're putting out content for beginners, so that I can jump in. And how do we find that?
We have a YouTube channel called The Backtesters. You'll see my face most likely, or our logo. Okay,
nice. And a video a day or a video a week? That's
a
crazy.
Video every single day.
365 days a year?
No, Monday through Friday. Monday through Friday. So we have 5 videos a week. Now, I call them my 5-minute video lessons. Spoiler alert, sometimes they go to 10 minutes. I'm sure you will put a link to our YouTube channel in the description, in the show notes.
Yeah, I probably will. Maybe.
Please do that.
Of course I will.
Hey, Talmor, can you put our video link in the...
Of course I will.
Nice.
Now that it's on recording.
Yeah, we're holding him accountable.
We're recording. Yeah, accountability is part of this stuff too.
Absolutely.
Right? You put stuff out, you make it consistent, action for yourself, a habit, and with what is it? Accountability. A habit with accountability is forward momentum.
Absolutely. That's a habit with accountability.
That's what we're doing. Boom, boom. Damn, a video a day.
A video a day?
How long have you been doing that?
I think I've been doing that for maybe 3 or 4 weeks.
There we go.
But I also have another 2 weeks scheduled, so it's ready to go as soon as, in YouTube, you can schedule a video to be released at a certain time. So I have about 10 of those ready at the moment.
Sweet. So on YouTube, the Backtesters,
yes.
And then that's one way to get to the Discord. If you're interested in actually getting into if you find some passion in there, you can jump in the Discord.
Absolutely.
It's not for speculation, right? It's not for just watch.
No, watch the video, join our Discord, or just join our Discord first. Yeah,
sounds good. I don't know if I want to go into which direction. It's okay. What else is there? So there's beginner stuff. There's Discord. There's.
Now, by the way, if you happen to be watching this and you actually believe you're a more advanced trader than what we do, I would love to collaborate, right? I don't pretend for a second that I know everything. In fact, I try my best to learn every day. So
this is the humble area.
Yeah, I've been grateful to meet people through my online presence.
No, you're super humble, and I think that we create a space that's inviting to accomplishments and to being normal and to growth and to that's the thing. It's really important who you surround yourself with and the support that they give you. If they're supporting you in a way, then there's an infinite amount of enjoyment and a possibility. So
I do want to say, just from my perspective, I frequently there's so many different technical indicators and different charts that you can make. So there are frequently people that say, hey, you're not doing this with your technical analysis. And look, I think technical analysis is great. But my only thing is, let's backtest it. Let's prove that it works. So let's see if something worked over the past 100 occurrences. I don't want to see a cherry-picked bull flag turning into a continuation. I want to see every time that has succeeded and every time that has failed and what the risk to reward was.
Yeah, we'll back it up with data, science,
right?
Not some dart at the board.
Yeah. I get it. We're not here. We're here for the depth, right. We're here to actually make money. That's the thing. Look, if someone is selling a trading indicator, they can pull every best case scenario ever, right? It might happen 1% of the time, but they put that 1% of the time into a presentation and they show you how much money you would have made, not mentioning the fact that it failed 99% of the time.
Right. How can you put all your eggs in one basket for that 1%? That's not a realistic way of investing. So,
right.
And putting it into that context is you can't just throw out an idea and it be something that makes you money, right? Because most traders fail. Why? Because of the experience level, right? The amount of backtesting they've done, which creates experience. Absolutely. Backtesting directly correlates to experience, right?
By the way, a lot of traders, every successful trader backtests, and that's the thing that people don't realize. All of them. They just might call it something different. Some of them call it charting. Some of them just call it studying past trades. Some of them we call it backtesting, which I think is the official term. But there's different names. Some just call it studying. Okay, but
yeah, I get you.
At the end of the day, every single successful trader is backtesting, whether they realize it or not. In fact, I had the opportunity to watch Tim Sykes speak live, and he.
One sec. Want to answer? Go for it.
No. Let's see if this is a recording. Yeah. It looks like it is.
And it is. All right.
Yes.
How's the battery on that one?
Batteries should be good still. Be careful about your hands.
We're fine.
On that side. Oh, they're good.
Yeah.
So, yeah. So I had
Tim
the
Sykes.
opportunity to watch Tim Sykes speak at a conference. And by the way, for those of you that don't know, if you just Google penny stocks, Tim Sykes is the first person that comes up. In fact, I think if someone is new to trading stocks and wants to learn how to do it full time, I think he is one of the first people that he's one of the first people that you would come across if you're just looking into trading stocks. And I actually.
So you recommend that as like a gate into
no,
understanding?
No, that's not what I'm going for. But
okay.
I actually had the pleasure of telling him that I believe he is the first face that people get to know when they look into trading stocks, and he was very appreciative of that comment. And I was thinking of it less as a compliment and more of just like a matter of fact, because hey, check it out, check out penny stocks. I'm sure he's got to be on the first page that comes up. Anyways, in his presentation, he mentions, by the way, I spend hours and hours a day looking at historical charts, looking at past charts and past trades. And that's like the last bullet point on the slide of successful trading. And it's like, by the way, this is super important. But the traders online that are trying to sell you something mention that last because it's the most tedious, it's the most boring. It's way sexier to talk about your 100% winner that happened once than it is to talk about the hours a day that you spend looking at chart after chart, trade after trade.
Of what doesn't work, all the things that don't work, or why they don't work. No one talks about that. They just give you the final result.
They give you the highlight reel.
Right. And yeah, it's just something you can't do anything with, right? Or unless you pay them when you're already like
right. So you could pay someone for back testing that they did, right? Which if you buy any service, they back tested the trade that they're giving to you.
Oh, you're just saying like you must see the back testing for something you buy in terms of stock.
Yeah. Well, for example, if a trade stops working, you need to understand that in context. So if you buy someone else's back tested strategy, they're most likely not going to give you the context behind.
So it's like you have to buy if you get something, you need to have the owner's manual.
Yeah, you need to, in order to succeed with it, I believe you need the nuts and bolts.
True, right? Because there's fluctuations all the time.
Yeah. So, for example, let's say you're doing a strategy. Let's say it worked 1,000 times in a row, but you happen to do it and it stopped working 10 times. Okay, well, that might be bad luck because there were 1,000 times before that where it did work, and you need to trust the 1,000 times more than the 10 times.
And just keep going, and not change anything.
Right.
But some people will change for that 10%.
Maybe something only worked 50 times. Now the fact that it stopped working 10 times is a lot more significant, and you got to see if there's something that changed in the market or something that you need to change with how you approach the strategy.
Essentially getting off the ground, right?
Now, what most traders do is they'll make a trade that they've tested 0 times. And that's why most traders fail.
I see. But yeah, you're bringing up some good requirements for getting into this. It's don't just waltz in.
Look, you could sell puts and make a consistent income all day, but why not prove it?
Right, for longevity. Sweet. Well, I think if anyone who wants to jump in and learn about stocks is got some insight on, or got a little tickle. If all the people who have the little passion for placing their money into the stock market, I think that they have some insight now.
Absolutely. Now
that it's not like an overnight thing. It's not like you find the right person and you're going. You just gotta learn, right?
And look, you could have the right strategy. You could have the right strategy, but if you don't have proper position sizing, that's another big thing. And you hear a lot of people say it. Again, it's usually the last bullet point, but risk management. And risk management has a learning curve too, because it's very difficult to fight the human nature of seeing something work and then wanting to do more of it. But you have to think of every trade as a portion of your account. So if something works, like a very like logical way of thinking about things is like, oh, if this works 5 times in a row, let me trade it bigger, okay? But it's more like if this trade works to a certain degree, it should be X percentage of my account, and it should continue to be X percentage of my account. And ideally, your account grows, and therefore your trade size grows.
And the size of your investment, or the portion of your portfolio that it goes into that one strategy, has to do with the integrity that strategy has and how profitable it is, right? Would that...
Yeah, it's win rate and risk to reward. So if you're making $2 for every $1 you lose, and if you win that $2 70% of the time,
but like let's say you find a strategy. Sorry to interrupt. You find a strategy that works 100% of the time. You've done it 1,000 times. Why not put your entire portfolio?
Well, nothing wins 100% of the time. Nothing wins 100%. But if it did win 100% of the time, then
well, essentially in the long run, the whole stock market goes up, and I mean that's not guaranteed, right? But
it's built to go up,
right? So you put all your money into a reliable thing that for like in 20 years you will have made 2% or something.
Oh yeah, if you just want to buy the S&P and you have more than a 10-year timeline, and you don't want to worry about trading, like go
close
all
your
in.
eyes. Close your eyes. But for when you're putting money in an investment, do you decide how do you decide what percentage of your portfolio goes into it if it's winning?
It's a formula that's based on the Kelly criterion. I don't know if that's the best way to position size, but it's the best that I know of. So I take the Kelly criterion and I multiply it by 0.15. And I will even cut that 0.15 into smaller pieces if I feel like I might have overlapping similar trades, right? So I might open trades. I might have 2 or 3 trades of the same type at the same time. So you factor that into the
diversity of that trade. So like essentially those 2 trades are one basket rather than 2 baskets.
Yes. Which is again something I had to learn the hard way. Right? It doesn't.
Right. So
it's not so obvious.
A lot of the lessons learned are just appearing on your YouTube channel, right?
Absolutely.
Through those the free form content. It's not the snippet type content, right?
Right.
On YouTube.
It's so each 5-minute video lesson has a specific topic. I kind of tie in. I just focus on that one topic for 5 minutes, but I might bring up little pieces.
And then there's other videos. So there's the how-to videos, but then I think there's experimenting in other ways of like just talking about why gold went up.
Yeah, so every couple of months I do a personal update where I just talk about where I am in my trading career and where I am with the community and how my account's doing and if I'm making money or not.
That's some juicy stuff.
Yeah, it is
right?
Some juicy stuff, right?
Yeah. And I think, I appreciate you like being transparent about like what you do and whether, like how you think, right? Not everyone like is just free into their mind, putting their mind on the internet, and I appreciate that. I think that integrity is the new stock in the content.
Absolutely, yeah. Integrity is the new value, right? Because somehow in society we got to a point where we just decided all lying was allowed if you just call it marketing.
Yeah. Where do you see that?
Everywhere.
Oh, okay. Yeah.
Yeah. How about any juice box that says 100% juice? It's like, but you look at the ingredients and it's like all of this made up lab stuff.
Yeah, we're pushing the boundaries of reality because of the internet.
Yeah.
We gotta oppose that. We're on the opposite. I think I'm on the opposition side of. Yeah.
I think I would like to think that I am pushing the boundaries of integrity with trading because I post every entry, every exit. If I lose, it. I share it. And I don't think you can get any more transparent.
So you don't see that often in the trading world? Some guy telling you, well, he claims, or someone claims that they've done this, and they might show you something, but there isn't video proof of it.
They might show a highlight reel. They might show they might cherry pick the videos they show you. They might cherry pick the charts. So
I see. It's like really hard to prove your authenticity on the internet in general, right?
There was a service I paid for at one point that gave trade alerts via email, and I would follow them, and I had to make my own spreadsheet to see whether or not these trades actually paid off. And I was going, and some of them paid really well, and those would get highlighted in another marketing email that would be pushed back to me to remind me how great of a decision it was that I made signing up. But then there were a lot of trades where they would just never post the exit. They would never tell us if they got out, and it would just be like a black hole of no information, and they were likely 100% losses, and I would just have to assume right, you
have to fill in the gap.
There's another service that I signed up for where they would give the trade alert a day after they made the trade alert themselves, and if you were following the service, you got in at a completely different price way later, and the losses they would just kind of sweep under the rug. They would give a super optimistic spin, all of a sudden they're long-term investors in this random penny stock that no one ever cared about.
And then they turn their stock trading into a marketing business rather than stock trading pure.
Because they don't get, they got my $1,000. They just have to find another sucker.
They just have to entertain you to thinking that you bought something of value.
Right, and it's so what? Am I really going to drop my world and sue this company and get together a class action lawsuit for $1,000, or am I just going to move on with my life and find a way to make $1,000? Although I honestly lost more than that following their trade alert. But it's a consistent issue, right? So that's why I'm not selling alerts. I'm actually giving alerts away for free, right? Because look, I do them to make money, but sometimes they don't. And the concept's not about just being spoon-fed. The concept's about, look, backtesting is a concept that makes sense. It's a concept that most people don't address. It's a concept that works. Now, the specific trade or the specific strategy might change, but the ability to prove that a strategy works, or at least has worked up until now, is something that will always be valuable.
Do yourself, right? Let's go.
Yeah.
Be the example that you want to see, right?
Absolutely.
And that's what you can find at when you log into Harry Gold's YouTube. That's what you,
absolutely.
Subscribe. That's how we do it. And that's my goal as well. The real deal, the real life, the real
deal. This man may look like a model, but he also has a personality too.
I'm not just here. Yeah, I have a life as well. I appreciate you contributing to this project I have.
Excellent. Thank you so much.
Yeah, thanks for being on the podcast.
All right.
Anything you want to shout out?
Yeah.
I guess let's just in case they didn't see the in between parts. Yeah. What things would you like to shout out?
Okay. Yeah. Absolutely. Feel free to join our Discord. We give free trade alerts almost every single day. Of course, whenever there's a trade in play, that turns out to be maybe 3 or 4 times a week. We also have free educational videos daily that we give on YouTube. We do have a paid subscription for $150 a month, where if you want to collaborate directly with myself and other strategy collaborators, you can pay to be in that room where we discuss in detail all of the strategies that we do. And you can also sign up for direct one-on-one mentorship, and you can see and learn these advanced option strategies that I do directly from myself. All right, that's it. That's the shout out.
Yeah.
Go to the-backtesters.com, where you can find a link to both of our Discord and our paid services.
Oh, it's right there.
It's right there.
Is there any barrier to getting in the Discord, or is it just a link?
The Discord is free. You could join up. You could join the Discord. You could get our free trade alerts. You could start making money no matter who you are. There's no barrier to entry. I mean, maybe a connection to the internet and money to actually trade with.
Should no investments too small?
I mean, you probably want a few $100 to start with, and you want to have a brokerage open, but
Okay.
a lot of these trades are much more affordable than people may realize.
Yeah, there's should put your energy.
Also, subscribe to Talmor's podcast. There will be more episodes.
Always welcome to subscribe to this this YouTube channel.
They say
Thanks
first the worst and second the best. I'm glad that I could be the second episode.
Of course. It's the beginning, so there's a lot of
We're just getting started.
a lot of strength at the start. Thank you so much for being
There we go.
Thank
Perfect.
you. And that's it.
That's it.